I'm so sure most of you have never met this mwalimu before. Those of you who have never met this mwalimu before, my name is Dr. Aura and I teach at RCM. I teach all the papers, AFR, AFM, Advanced Management Accounting. And of course, I don't teach alone. I co-teach these papers with great lecturers around. So today we are here simply for what year? For AFR. And today's session will be a great session, ladies and gentlemen. And this is the handout which I'll be using, which I would want to share here. And then please ensure that the handout, you will be able to download it and share it with our colleagues in all the WhatsApp groups that you find yourselves in, all the groups, especially the paid groups. So let me start by sharing this handout here. So we shall do 2 classes covering these theoretical areas. The first one will be today, 1-hour session, another session tomorrow at 4 p.m. Tomorrow at 4 p.m. And then that will be it. Save. And then I come here, ladies and gentlemen, I share this in the group. And I'm so happy because I can see we are 150 students who are thirsty for knowledge. All right. So confirm that you are able to see the handout. Confirm that you are able to see the handout, ladies and gentlemen, and then confirm that somebody has been able to share that handout with ourselves in the WhatsApp group. Yeah. So in this case here, please get that handout and share it in the WhatsApp group. That will be very, very good. And then, of course, now without much ado, I'll be able to portray the handout that I'm using here very fast. And you can see those areas that you guys have predicted are the same areas that I'm also dreaming about. You guys are very, very close. All right. So, of course, in this case here, we have related party, especially the disclosures bit of it. Related party disclosures. It will be very important for us to appreciate, first of all, who a related party is and why is it important for us to account for these related parties. Now, ladies and gentlemen, assuming that I'm one of the directors at RCM, directorship at RCM will automatically give me what we call key personnel. It will make me to become part of the key personnel managers or management. When I'm a key person at RCM, if I'm not watched, chances are I could be, in this case here, the person who does lots of what here, theft in the company. It could be directly or indirectly. When you're a key person, remember you are the one, for example, who could be authorizing things within the company. You can easily take companies' motor vehicles and use them for personal work. And you don't want that to be accounted for. And that is why IAS 24 wants you to start from right away identifying what we call relatives of this company. We call them related parties, because related parties, ladies and gentlemen, that is where really corruption can happen most. Remember the case of CMC Corporation, big corporation that today as we speak is on its knees. Why? Because of the issue of related parties. We are told the directors of CMC, we are told, it's an allegation, they went and created subsidiaries in Southern Sudan. So those subsidiaries are the ones now that were importing vehicles from their various sources. So those vehicles come, Southern Sudan subsidiary. The Southern Sudan subsidiary, now they sell the same vehicles to the Kenya's parent company at a very high price. Of course, the profit earned is distributed to the who is who in Southern Sudan. So then these vehicles now became very expensive in the home market here. Their leasing model could not work because already they had built in an extra price that now people could not even afford them at home here. That mistake arose because of what here? Related parties. So related parties must be identified, and whatever that they do with the company has to be disclosed. Whatever they do with the company has to be disclosed. Whether they buy, for example, motor vehicles at the normal price, like the price in this case here, other customers buy those vehicles at, even if it is at normal, what we call arm's length price, arm's length transaction, so long as it's a transaction between you and your related party, automatically that has to be disclosed in accordance to what we call IAS what year 24. So great, and that is it. So now what I need to do is to come and just read this handout. So who is a related party? It's a person or their close family member is a related party, the reporting entity, if they have control or joint control over the entity. They have significant influence over the entity, are part of the entities or its parent, key management personnel, KMP. When they are entities, two entities are rated if one is a parent or a subsidiary of the other. If one is an associate or a joint venture of the other. A person or close family member who is a related party to one entity has control over the other, has significant influence over the other, is a key management personnel of the other or its parent company. I would want to simplify this. Now, ladies and gentlemen, whenever we talk of related parties, I would want us to be thinking over this. Whenever we talk of related parties, always think about a related party is our parent. If, ladies and gentlemen, we are RCM and we happen to be having a parent company on top of us, then automatically we are related. If RCM, with that parent, we do any business between ourselves, that transaction has to be disclosed. So whenever we talk over associates in this case here will be our related parties. Why? Because of this very, very important concept here. Whenever you see this one here, any company that you have got significant influence, a company that you can go and tell them that, hey, I want you to do A, B, C, D, then that company is your relative. Because you can't just walk to any place and then you start commanding people that are not related to you, people who don't understand you. All right. So anytime they ask you about related parties, you give these examples. Say a company is our related party if it's our parent company. If in this case it is our associate. Ladies and gentlemen, if it is what here, our subsidiary. If in this case, ladies and gentlemen, we have key management people, the directors, those are our related parties. All right. Those are our related parties. If we have a pension plan, it's not mentioned here. A pension plan, ladies and gentlemen, is your related party. If you look at the University of Nairobi, they have what we call the UniPen, yeah, which is a scheme for those professors, for those lecturers, and of course, admin staff. Automatically, University of Nairobi must be able to account for UniPen, which is their pension scheme, as a related party. All right. So whatever that happens between the pension scheme and the parent company and the University of Nairobi, then that has to be disclosed. Now, why is it important for us to disclose these related parties? It ensures transparency, because I've told you, mostly theft will happen between these related parties. And that is why whenever you have, for example, what we call internal sales, intra-sales, such sales is normally deemed to be fake. It's fake. All right. It has to be eliminated. I know you guys have done group consolidation. Why are we eliminating it? It's because of that relationship. Because whatever you are earning from a related party cannot be real business, cannot be genuine business. According to IAS 24, business, genuine business, is what comes from third parties, not related parties. Related parties, we really need to monitor quite closely, So then, what is a related party transaction? Any transfer of resources. When you transfer resources, it could be monetary or non-monetary. When you transfer resources, you offer services to a related party, or even obligations, transfer of obligations. You've decided to take a loan on behalf of your related party, that automatically will be a related party transaction. Price may or may not be, even if you are given for free, so long as it's movement of resources from one related entity to another relative, automatically data has to be disclosed. So example, sales to a related party, that has to be disclosed, loans, provision of services, asset transfers, etc. And we were reading here, why are these related party disclosures important? To ensure transparency and a fair presentation in financial statements, prevents misleading performance, e.g. inflated margins due to favorable pricing. All right? You know, if you're not careful, normally for these directors to meet their key performance indicators, at the end of the year, they have to prove that for sure they pushed their sales up there, that their sales were very good. At the end of the year, what most of them will do is to ask a subsidiary, you call over and place an order, we even sell to you physically. I mean, that then has to be disclosed. We must be able to know why a subsidiary towards the end of the year was buying goods worth millions and millions. All right. And of course, that sale will be cancelled anyway. Yeah, it's very important for the users of financial statements to know exactly what is happening with these related parties here. So users of financial statements, they rely on full disclosure to assess risk and performance. Ladies and gentlemen, look at, for example, what happened with this big SACCO. I'm forgetting its name. This SACCO that is collapsing, the one that is supposed to be the mother of all SACCOs, quite a tragedy. Is there somebody who is able to remember that SACCO? Cusco, yes. Look at what happened with Cusco. The directors themselves, in this case here, were giving themselves huge loans and guaranteed loans. If they were following proper financial reporting standards, then those loans would have been nibbed straight away from the inception. Because rather the parties in the disclosures, you must say, if it's a loan, how much was given to the directors, all right? People would have seen, were these loans guaranteed? Are there any provisions for doubtful debts? People would have seen. But because that loan system happened for so long and there were no proper disclosures, then now what is being seen there came to pass. The same in this case here happened with Chase Bank. So whenever we talk of related parties, ladies and gentlemen, it's very, very important for you, especially for those of you who are, for example, working at KRA. I mean, why would people open so many companies? So assuming, for example, we have RCM, we have RCM College underneath, we have RCM Publishers, it's because these people would want to play around with things. So then the very first thing you go as an auditor when you are asking here, ask something to do with IAS 24. Have you been able to map out your related parties? Let them give you those documents. This document, go to the register of companies and check how many shares do they have. Is it a subsidiary? Is it an associate? etc. In between the year, were they able to do any business? Get a bank statement. Check whether there is transfer of resources between these two companies. All right. So it will be very, very important for that transparency, So we have those common examples. And then now this is the most important. If you look at your past paper, they always ask about disclosure requirements. What is it that must be disclosed? If, for example, these subsidiaries have been able to sell goods between themselves, so you must give us the amount of the transaction. If it is directors, you must tell us, Joshua Aura is a director of this particular circle, and in the year he took a loan worth 10 million. You must always mention like that. And then at the end of the year, when you're giving us a statement of financial position, you must give us outstanding balances. He took 10 million at the beginning of the year. By the end of the year, he's left with this amount. So you as an auditor will be able to see this gentleman took 10 million, and at the end of the year, he has 10 million plus interest. So he's not repaying. These are risks. Allowance for doubtful debts. Remember, these people, when they want to steal from the company, they'll want to say that these debts now cannot be paid back. You can imagine how people can be bad. So they want all that amount being written off. So ask yourself, in between these related parties, do we have any doubtful debts? If there are any doubtful debts, then you should be able to put a red flag. But for now, what we are looking ourselves is the disclosure. Also disclose the name of the parent and the ultimate controlling party if different. What in this case here nowadays, they are calling what here? The beneficiary, the ultimate beneficiary. Ultimate beneficiary, because nowadays what happens? If RCM or rather Joshua Aura wants to open a new company, I will simply go and put RCM. If RCM is my company, I'll go and open a company called ABC. And then say that this company ABC is owned by RCM, 100% shares. And then I put a director there, somebody very different, because the director can always remove anytime. Nowadays, everybody is asking for the beneficial owner. Yeah. So who is the residual? Who is the ultimate beneficial owner? So if you say a company is owning company ABC called RCM, who is the owner of RCM? All right. So you must give us the name of the parent and the ultimate controlling party if different. For key management personnel, because this is where we expect theft to happen, you must give us total compensation. How much did the Aura earn from RCM in the year? When they retire from this place, do we have in this case here some pension arrangements, post-employment benefits, other long-term benefits, termination benefits? Do they have in this case here any share options? So the share-based payments, you must be able to give us this. Ladies and gentlemen, in this case, the most important thing that you're supposed to be able to disclose here, the relationships are very, very important. It doesn't matter whether it's a market or not, so long as you have been able to transact, there's movement of goods, whether you bought or not, that has to be disclosed. And then, of course, if there are any bad debts arising out of these related parties, you must give us the impact on the financial statements. All right. So practice question, perhaps I should be able to give you this practice question from the Kaplan ACCA kit for you to be able to practice on your own. It's called STEM. When I give you the book, you simply go and type there, search STEM to be able to get there. All right. So is there any question regarding this, ladies and gentlemen, or can I very fast go to integrated reporting? Remember, it's not about you cramming, it's about you getting this thing at a high level. And then being able to defend yourself whenever you get a question of this nature in the exam. I'm so sure you guys will be able to defend yourselves. So can I go to something different? So I'm waiting to hear from you. Great. Thank you so much, Ubi. Great. Yes. So then we shall be able to go to integrated reporting. Remember your marks. Although AFR is not like AFM, AFM nowadays is actually like 50-50. You'll get some AFM papers nowadays having over 40% theory. AFR, they really try to squeeze those theory marks, but you can get up to 25. And if you're good in theory, like myself, I'm very good in theory, I'll score all those marks, or even get like 22 out of 25. The moment I get 22, you'll be looking for very few marks for you to pass this paper. Very few marks. At times, I normally tell my students, when you get yourself getting a fail in some of these papers, then trust you me, there is a problem somewhere. Perhaps you're so busy for this paper or something. Because like all the theories of the AFR, we shall be able to handle them. They are easy papers. So in this case, I've been able to do AFR theory papers very well, get a question on a group consolidation. I don't need to get 100% perfection in everything that you do. Perfection is very, very expensive. Never aspire to be perfect. So don't look for 100% in a theory question. Not theory, but a completion question. It's about those entries. There are entries that you must adjust very fast, and then you get marks, Perfection is very, very costly. Even in marriage, if you seek for perfection in marriage, you shall part ways. You shall part ways. There is nothing that is perfect in this world. Nothing is perfect in this world. So you get one question here, you get cash flow. Cash flow, I've also taught you the shortcut. Have you guys ever watched any of my video that is talking about shortcuts when you're computing cash flow statements? You need to watch this in YouTube. If you haven't watched yet, I'll be able to show you that shortcut. It's not about balancing. If you go balancing a question, I will teach you again next semester. That one I'm so sure of. Because it takes quite a lot to balance a question. If you try balancing a question, you'll do one question with more than 1.5 hours. That's a recipe for failure. Every question maximum should be 37 minutes. 37 minutes. Wow, great. So we shall overcome. We shall overcome. I'll be able to share with you this cash flow question just for your eyes only. For your eyes only. Because where we have reached, the time that we have, ladies and gentlemen, don't look for perfection. Never look for perfection. Never look for perfection. Even at the workplace, never look for perfect employees. Those perfect employees at times, in this case here, could be sick. Some of them could be suffering from bipolar, isn't it? Yeah, if they're very perfect. No. Even in the house, for those of us who have maids, if you keep on looking for perfection, you'll be chasing those young girls every other week. So no perfectionism when we are studying and when we are doing these papers. It's all about throwing points under there, and then you survive. And then later on, now you'll be able to tell people how good you are in AFR. Later on, even us, I can assure you, we never even perhaps got 60%. No. And here we are teaching because we don't want perfection. All right. Yeah. Ojo is asking if a company sells goods owned by, or rather, we have a company here, a CEO's brother. Remember, the family, close family relatives of these key personnel management, like CEO. If you have close family members doing business with your company, automatically that is a related party transaction, automatically. Just like, for example, how you'll get a president's wife, how you'll get a president's wife, for example, ladies and gentlemen, doing business with the state. That's a related party that has to be disclosed. If the president has a brother and is doing business with the state, that should be disclosed. Because, of course, we know that there is a way they can find, some shortcuts there. They can find some shortcuts there. Thanks for asking that question. All right. So then allow me to go to what we call integrated reporting. Integrated reporting. Integrated reporting. To integrate is to put things together. To integrate is to put things together. So at the end of the day, when we talk over integrated reporting, this is that report that looks at the F, E, S, and the G. Yeah. The sub-reports. The sub-reports, these are F, E, S, and G. Yeah, so you take the financials. We have in this case here the environmental reports. We have social and the governance reports. All of them you integrate and put them together on one report known as an integrated report. FESG. I hope you've been able to take your notes down slowly there. You take your financials, and I should be able to download. Is there somebody who can easily download EABL Integrated Report 2022? Integrated report for whichever year. Even the 2024 one is out. These guys are great. They have been able to finish their audit. Oh, right. Great. Because when we show you these things practically, they tend to make a lot of sense. All right. Oh, November. Right, just a minute. So whenever we talk of integrated report, ladies and gentlemen, we are looking at a wholesome report, which has got financials. It has an environmental report. It has got social report and the governance, and the governance, and the governance. Very important for us to be able to appreciate that. Very important for us to appreciate that. When you talk of an integrated report, this is a report that has been prepared on the basis of what we call triple P. Triple P, bottom line. Triple P, bottom line. So triple P looks like this. PPP, triple P like that. That has to show profits. It must show profits. It must tell us what we are doing for the planet, and it must tell us what are we doing for the people. 3 key things. So it can't be a world of money, 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 money only. That you are the only ones, in this case, yes, directors who are simply pocketing money, money as shareholders, pocketing money, money, and then the other stakeholders are getting nothing. No, that's the greedy model. We started this company together. All of us as employees are working in this company together. Should we have some fruits, great fruits coming out of our labor, then we should be able to share equitably. The people must be happy. So when you talk of people, we are looking at employees, the stakeholders. We are looking at directors as well. We are looking at suppliers. If you're that company that takes too long to pay suppliers, like now what we are seeing with this county government, that is not right. Integrated reporting is all about increasing the happiness index for all the stakeholders, people, very, very important, all. So for example, we are running a multi-billion company. If you're running a multi-billion company, then what are we doing to our surrounding community? Do we have some quota system that is able to guarantee the people who are giving us even security to be around here? They're able to buy our goods. Do we have some special reservations for them in terms of jobs? Are we building schools for them? Are we doing boreholes for them? All right. So the people must be happy. CSR, yes, the people must be happy. The planet, of course, we expect to plow back because we consume so much from this planet. We need to give it back. So giving it back means in this case here working on, for example, planting trees to ensure that trees will be able to absorb carbon dioxide. Yeah, so that we are good with the ozone layer. All right. Carbon emissions are not very good. Whenever we have this carbon dioxide being emitted, let's have, ladies and gentlemen, trees that are able to absorb those carbons from there. All right. So we need a whole chapter talking about how good are we to the environment. Are we able to use, for example, are we a company that is able to use the 3 R's? Do you know the meaning of 3 R's in terms of the environment? 3 R's, somebody who can talk about 3 R's? Because we can't talk about planet if you're not very good with these 3 R's. Like Stanchart, I&M, you can see the kind of headquarters they have come up with at Westlands. They're green. They've gone green. So the 3 R's, I'm waiting to see somebody will be able to say something about the 3 R's. Reuse. That if it is water, simply because somebody has gone and washed just their hands like this, we should not have this water just going to the soil like that. That water should be passed through some kind of purification exercise, and then the same water comes back. It may not come back for drinking purposes, but some other uses there. So we must be able to reuse our resources. We have recycle. And then we have, of course, in this case here, the concept of what here? Reduce. Yeah, so if it is paperwork, for example, you can have a policy like, we shall not be printing every other thing that we come across in the company. So we start, in this case here, winning, we start reducing. So reducing is the same as what you're refusing. So you go to a supermarket, somebody gives you like a carrier bag, like now I'm a man. So if I want to take, for example, like a bread, and you want to give me, I should be able to eat my bread as somebody may tell me that that's bad manners, but you see, I want to be good to the environment. So it is a reuse, recycle, reduce, or refuse. So for example, if you're doing photocopying and you are photocopied on this just one side of the paper, bad companies, they will throw these papers. No. Good companies, ladies and gentlemen, should be able to retain this paper and reuse the other side. Do we have somebody who is working for a very good company, a company that you'll be able to say that is very good to the environment, which have an environmental management policy that really does the things that we're discussing here today? Anybody who is working for a company that is very environmental, conscious, sensitive, that if you just start producing papers anyhow, you can even be sacked. Like embracing of e-library, that's very good. And such companies, they pay very good salaries. Such companies, they pay very good salaries. Printing for signing is a no. All documents signed electronically. Those are the best kind of companies I like. Iko mwingine, kila kitu ni paperwork. Not knowing that these papers are being sourced from trees. They are being sourced from trees. All right. So if you allow me now with that background, I'll be able to just go through this concept of integrated reporting pretty fast, and then we get out of waste collectors are supported by a company to invest in recycling. Lizzie, this is a very good company. How I wish I get to, this is a very, very good company. That the waste collectors, you would want to know where are they taking their waste. And if possible, we assist them. We invest in their recycling plants. That's a very good company, Lizzie. I don't mind being your auditors in the near future. I also run a very good audit firm, which is sensitive to issues of water, environment. We always audit. We have key audit areas that we look at. So again, ladies and gentlemen, there is no way you can ever talk about integrated reporting without looking at the 6 capitals. The 6 capitals. Lucy, thank you so much. Water harvesting. Iko mwingine tu ameweka tu mabati hata kwa nyumba yake. Mvua ikinyesha yote kwa mchanga. Wewe sasa uangalii, unataka dunia ikuje kuwa moto tukufe sisi wote, unataka tuende wapi? That water has to be harvested. Have these roto tanks. All right? Yeah, you must harvest. Actually, in other countries, having good harvesting, water harvesting systems is compulsory. You can't be given a license to build a house until you prove. All right? Thank you so much. So then, but do you know the 6 capitals of integrated reporting? Do you know them? Do you know them? Do you know them? The 6 capitals of integrated reporting. Human capital. I love that, Catherine. Yeah, human capital. These people must be happy. We must be sponsoring them to go and study at RCM. Like now I'm happy because most of you, a big percentage of our students from KRA, students in this case here from the Office of the Auditor General, and most constituencies, they are paying for their students, or rather for their employees to study at RCM. That is really good. They're investing in people. So we have intellectual capital, I love that. We have financial capital, yeah, social and relational capital. We have natural capital. Thank you very much. Yeah, so those are things I expect you guys to be knowing. So we have here, this integrated reporting shows how an organization creates value in the short term, medium, and long term. If, ladies and gentlemen, you are only thinking about shareholders' profitability, then you shall be able to sacrifice so many things. If you're only looking at the financials, trust you me, we shall not be able to invest in the environment. We shall not be able to invest in our people's social angle. We shall not be able to invest in our governance, and thereby we shall kill the whole internal control system. So for us to be there in the long term, for us to experience what we call longevity, we need to think about integrated reporting. And integrated reporting is how do we do investments in a way that we shall be able to create value in the short, medium, and long term. Value creation is based on 6 capitals. We have financial capital, money and funding. We have manufactured capital, the physical assets, the buildings, the machines. We call them manufactured because in most cases, we started like RCM, we never had anything, but now with the time, we are able to do some constructions here and there. We are able to own machines here and there. So we have manufactured that capital. Then we have intellectual capital. Good companies must have patents. The innovations in this case here must be trademarked. If you're working for a company that does not own even a single trademark with KPI or ETC, is it KPI or KP? This organization that approves, and of course is able to keep trademarks for us, then you're not working for a very good company. Or if the company is yours, you are basically lagging behind because there is a very, very important capital base that is supposed to be building. Because if, for example, you have not patented, for example, like RCM College is patented, somebody will be able to come from outside there and form the same style, kind of a name, and they'll be able to beat you in business. You start marketing for them. So once you start discovering some things here and there, however little, small they may look like, always ensure that is intellectual capital and ensure that you are patenting. Then we have this human capital. Take care of your employees, they'll be able to take care of your customers. So human capital, what kind of skills, experiences, motivating people, do you normally take them out there for some, yeah. Then we have, ladies and gentlemen, just like any human being, companies need also to be socially good. Socially good. You need to have partnerships, all right? You need to have, you know, I was reading somewhere that in this world, there is nothing like, for example, disability. That disability is bad attitude. Bad attitude. You know, money is always with the people. If you are that type of a person who cannot walk out there, try in this case here to be nice to others, try to help others, get to some of these clubs, for example, like Toastmasters, where basically you are talking about yourself, you are mingling with others in golf clubs, you will not be able to make much. So in this case here, also a company needs what we call social capital. So like, for example, as a RCM, when we sponsor, like now we have these maths, you must have seen us doing these maths competitions, sponsorships. Like on the 18th of May, we shall be in Kisi School. And we have invited 46 schools there to come and fight for our trophies. It's quite an expensive affair. That is 18th. Is it 17th? We shall be at Machakos High School. All right. We simply want to be nice with these future potential customers of ours in the future. So we start something small like this. At the end of the day, it shall become what you're very, very big. So we need to be social, because without these human beings outside here, without our sister companies outside here, Without our competitors, we would not be where we are today. So you need these corporate social responsibility programs. All right. So we have here social and relationship capital, partnerships, reputation, stakeholder networks, and then we have the natural capital. So natural capital, of course, we need sunshine, we need water, we need minerals. So we know that all these natural capital resources will be depleted. So what are we doing about them ourselves? If you look at your past papers, you must have seen a question telling you to describe, to explain the 6 capitals of IR, the 6 capitals of integrated reporting. So please, you should never forget them. It's very, very important. It's very, very important. Yeah, great, Francisca. We shall be there. One of the fine days, we shall be up there. So content of an integrated report, again, this is very, very, very popular. I mean, this integrated report, what should it have? Every company should talk about the future outlook, the future outlook. So as RCM, how does the future look like? For example, right now, we have a proposal with St. Paul's University. Would want to start offering their certificates, their diplomas. Basically, would want them to incubators, because we are looking at ourselves, in this case here, being the very first open private university for, business courses. So we have to look at where are we today, where are we going? What shall become of us in the future? You must define this. Even you as an individual, you must be able to look at your future from today. This is Joyce today. In the next 10 years, what should be of me? I should be a CFO. What do I need to become a CFO? I need to do this and this and this. 10 years from today, I should be having 6 kids. Yes, the more the kids, the better. We'll discuss about that in a few minutes. So give us the organizational overview. Yeah, where did we start from? What are we doing today? What type of products are we having here? All right. Business model, to avoid issues of people thinking that you are doing wash business, money laundering. You must tell us, how do you make a coin outside? If it's RCM, we make our coins by teaching students. So you must tell us your business model. If it's EABL, they'll tell you that they are basically converting grain to a very special drink that they put in a glass, grain to glass, and then they sell. So you must give us that chronology. You must give us that particular process that you're using to be able to get what year, to get money. Then you must tell us your strategy. What is your strategy? And of course, these strategies need resources. How are you allocating resources? And then, of course, you must discuss what we call performance, especially the key management staff, the COO, the CEO, the CFO, and the chairman of the board. They must always have a special area in the integrated report where they discuss performance. And I'll be able to show you how that works. Many times they have asked students to provide contents of an integrated report, and they are not able to do that. So this performance here is very, very close to what we call management discussions and analysis, MDAs, management discussions and analysis. We also call them management commentary. The purpose: it adds context to understanding the financial position, performance, and the cash flows. It's not mandatory, but it's guided by the board's practice statement. The key elements: we expect this CEO, CFO, and the chairman of the board to tell us the nature of the business model, basically, to give us the objective and their strategies. Our objective, ladies and gentlemen, as a college, is to empower personnel who are working in this financial reporting industry to become the best that they can, to become better versions of themselves. So what strategies are we involving? Having, for example, the very best teachers who are not only just classroom teachers, but experienced. people in the industry. All right. We have strategy, for example, ladies and gentlemen, this concept of charging low fees. I mean, we charge about 4,800 and we're able to give people so much. All right. Competitive fees. All right. So you must be able to give us strategies. What resources do you have financially? Where are you? All right. So for example, when we were getting our license with the HELB, you must show HELB. This is a private institution. Should it collapse, how will we be able to pay them back? Because these are loans being given to students. So you must come and tell them that we have got these resources. Like ourselves, we are big with the money market fund. So you tell them that, I mean, look at this money. When we even have a policy. This money should be able to go like this and this and this. So should we collapse, there will be this collateral for you. So you must show resources. Of course, as much as you may want to put everything in order, every company must have risks. So we expect you as management to tell us, this year, for example, given Kasongo's economy, tax issues, I mean, these taxes are really, really changing every often. So that's a big risk. Because automatically higher taxes means what here that you're going to have your products here overpriced. And if they are overpriced, chances are you'll be driven out of the market. Remember, this world is becoming a global, I mean, a village. Yeah. If it's a drink, you can order a drink from faraway company and it will be brought here within hours. So if our drinks become very expensive, people will just go to here in Uganda and they'll be able to make orders. So it's a risk. I don't know whether this is something I've observed myself. Like most clubs, what do you think in this case is the future of clubs in Kenya? Because I've started seeing even big people with money. Nowadays, what do? They take their vehicles, in this case here, buy these takeaways, and then they go some near forest. I mean, when you try seeing, and the other time I saw even now people have started carrying, I mean, cooking stuff. Kama wazee, so wanasema tuache iendelee kuchemu. It's crazy. It's crazy. So as a hotelier, this is something that I should be able to pick in as a risk. This Airbnb is something I should be able to put in my financial statements, in my integrated report as a risk. I mean, ladies and gentlemen, after COVID-19, business landscape is really, really changing. Sorry. I need to also look at the comments. Yeah, great. It's changing. That is why the other time I was having a discussion with some vice chancellor. I mean, these guys are very, very big in constructions. If you go to Embu University, Chuka University, they are really constructing. What do you think of those constructions in the next 10 years? Big risk. There will be very few people who will be going to those confines of 4 walls to study. If I were them, right now I would be doing a very, very big platform, virtual platform. Because currently, how many people do I know who are studying in Dubai universities? Very many, UK universities, simply because of what is this virtual thing. So if our universities are not careful, they are going to be left really behind. So this is not the time when you start investing in those particular things, no. Right now, a good university should be thinking of virtual. How do we make our virtual spaces very competitive? So they can even have people from the USA studying locally. Yeah, I mean, that's bringing foreign direct investments like that, bringing foreign direct investments. Even if there is open university in Kenya, I know that it's not enough. Every university should strive to be kind of an open. Open university is quite a different concept. Yeah, should strive to be big in terms of what here, online, in terms of online. Even in the future, let me tell you what will be happening, even in medical fields. People will be going to university classrooms for practicals. Most of these theories will be studied where? Out here. Outside here. It's debatable, but it's good for you to know those kind of risks that you'll be able to mention somewhere when you're asked. All right. So we have here relationships, very, very important. Results and the future prospects. Then we have key performance measures used by management. We shall take a 5 minutes break. I hope that is in order. When we come back, I'll be able to take like just 10 or 20 minutes or so. to finish. The 5 breaks basically will enable me to download some few integrated reports. So 5 minutes only, and then we come back. Please grab a glass of water. So there is a student up here who has asked a very important question that has just left me remembering something. Very important thing. I would have forgotten to capture this. A student who has asked a question here, Naftal Ojowi. This is a new student, I think, at RCM, but he's asking very good questions. Do we have a concept like connectivity of information in integrated reporting? Yes. There is one whole section that is highly examined, which I was almost forgetting. Thank you very much, Ojowi. When people will be going to heaven, you should go to heaven. So we have what we call principles of integrated reporting. Anytime you are coming up with an integrated report, there are those principles that guide you. For example, we have a principle called materiality. So under materiality, we should only include items of substance. We should not have, in this case here, immaterial things appearing in our statement. So the only stuff that should be in our integrated report should be what is able to influence decisions of the users of the financial statements. That is principle number 1, materiality. Only include material things. Those things that you know will be able to influence decision-making process of the users. That's number 1. Number 2, we have what we call connectivity of information. Remember, we have got various types of information in terms of IR, various types. For example, we have a financial and non-financial. You should be able to tell us, and the financial profits went up like this. And out of these extra profits, then we connect these to, for example, motivating people. For example, engaging in CSR. this CSR that we engage in, how is it connected to financials? Because these things are cyclic. You do a CSR, you plant trees, you thought that it's a cost to you, but later on you get so many guys coming up. You know, we saw you guys planting trees and we fell in love with your company. We saw you guys doing high school mathematics contests, sponsoring them. And now here we are as a student. So out of this CSR, so all those informations should be highly connected. So connectivity of what here information is a key principle. Even the 6 capitals, they're supposed to be very, very much connected. So if it's financial, this year, were you able to retain something out of your profits here to boost your manufactured capital? Are you sponsoring any innovation? When you sponsor innovation, then automatically that means what here? Removing some money from financials and taking it to intellectual capital. So there must be connectivity of information. There must be connectivity of information. Are we there, ladies and gentlemen? Are we able to follow? Are we able to follow what Mwalimu is talking about? Are they able to follow the principles? We have stakeholder relationships. The various stakeholders, ladies and gentlemen, are related, all right? So we have various stakeholders. We must use what we call Mendeley system of mapping. Mendeley system of mapping our stakeholders. So go ahead and tell us who your stakeholders are. Who are our stakeholders? Employees, directors, suppliers. Remember, we have connected. Yeah. And we also have, in this case here, those ones that are out there. All right. So how are we relating? Because most of the companies outside here lose on their longevity because of squabbling within organizations. When these various stakeholders in the company are not related, they're not relating very well, trust you me, the whole house will come tumbling down. When the center can't hold, the center is the company. When there are lots of squabbles, like right now, of course, I don't do politics, but because of how we relate here, at times we have to take you to things that you guys know. Look at the cost which our president is incurring for having chased Gachagua away. If you were the president today, do you think in this case it would have been good to chase Gachagua? Yeah, please. Do you think in this case it would have been wise? Would have you done that if you were the president? Would have you done that? Of course, Gachagua may have done very, very bad things to him, but do you think it was wise to send him away? So that is the concept of what here squabbles within an organization. It can easily, so when you are doing an integrated report, let's get to know how are the various stakeholders relating. When we see, for example, like people in Turkana seated on the road saying that they cannot allow any truck to leave with fuel from Turkana land to any other place in Kenya, it means automatically that stakeholders are not relating very well. So when I'm doing, in this case here, integration, integrated report is about bringing things together, bringing stakeholders together, bringing those 6 capitals together, bringing this FESG together. So we don't want a situation where, ladies and gentlemen, we don't want ladies and gentlemen, a situation where, great, I can see very good discussions there. I'll be able to read this later. I like students who are that verbal. That's very, very good. So connectivity of information is very important. Another principle is the concept of strategic focus. Strategic focus and the future orientation. Our company like RCM, we are really thinking about the future. And I know the future is bright. That is why we have begun the high school tuitions. And anybody who is having their sons, their daughters in our high school tuitions, they'll be able to tell you that they're getting value. We're investing in this case in very, very good teachers. We have about 80 students. They are not able to break even. But you see, we are looking at the future. Because when I walk around, currently now I have parents who have started doing what we call homeschooling. Like my daughter is at Moi High School, Kabarak. Yeah, and we have one parent who pulled a son from Kabarak, not to take him to any other school, but to do homeschooling. So I'm trying to look at 15, 20 years down the line. I can assure you, ladies and gentlemen, our future will be online. The other day, I wrote a proposal to Alliance High School. I wanted RCM and Alliance here to partner in a way that we get Alliance education outside here virtually. Those guys could not see my idea. They turned down my proposal, but I really wish they listened to me. Because, I mean, who would not want to get Alliance education outside here? And I was willing to pump in money, to partner in this case here with libraries, to even put up very big screens where those classes here can be. Basically, if you don't have these small gadgets here and there, you can go to a library on Saturday and get a screen there. You're being taught by Alliance, a teacher from Alliance. And then we get into some kind of revenue share. I mean, I was telling them this was a $1 billion concept, but they never listened to me. So we must be fixed on the future. Yeah, strategic focus. How are we going to add value? All right. Buka Academy, Mumias. Russia, maybe if you have connections, you can talk to me. Yeah, yeah. So we need here to, ladies and gentlemen, companies that were not fixated on the future did what we call strategic drift. Look at Kodak. Kodak was a big behemoth of a company. The only mistake they did was strategically drifting out of what the future wanted. They still wanted you to, they used to use that, what concept was that? Quite an old way of photography, where they come and they take you through a photo, your snap, and then they return that photo to you like after a week. And then we had this smartphone coming. These ladies, they would want, in this case here, when they take a photo, for example, like 1 minute, next minute it's on Instagram. So they lost it. When you strategically drift away, that is very bad. And that is why integrated reporting wants you to be well aligned with your strategy and the future orientation. That's a principle of integrated reporting. So the report in this case here must be able to show us the strategy and how they are creating value over time. Because your customers will always be looking at value creation. If you're not creating value for your customers, these customers are very, very bright. They'll be able to source whatever they're getting from you elsewhere. And then they'll be there crying, who moved away my cheese? Who moved away my cheese? Like currently, I'm sorry to use some of my competitors. Of course, they have really been able to push us up. If you go to Strathmore today, you can't get the number that you normally guys see at RCM studying at Strathmore, not even at Visions. I was a student at Visions, and those days, we were thousands and thousands. But they slept somewhere. They drifted. They never knew, in this case here, what the world wanted of them. After COVID, the world, in this case here, wanted what here online. Now, the colleges which are shining in terms of online, it's KC and RCM. Look at, in this case here, the kind of numbers that we have. If you look at AFM evening, we are talking of 400. If you look at the AFM, it's over 1,000. Just a small trick. The world wanted us to go this way, and then you see now, once you move a little bit slower, and then we have other colleges now having what we call fast mover advantage. You coming to follow them later, it will become very hard. That's why even now universities are approaching us to work now with us. And we were a very small college. A very, very small college. All right. And I can tell you, in the next 5 years, if God helps us, of course, with God, we shall be very, very far. And of course, with your help, you as our students here. And you can see how we are doing product diversification. Now our CBC books are out. That is what we call integrated reporting. You must tell us, what is your strategy? Are you growing your product portfolio? How are you creating value with the time? So what we're trying to do, for example, when we come up with these many products, we want to use the same market. Right now, the kind of sales that we have, most of you, we are so assured of some of you having 1 kid, 2 kids. You will buy our CBC books. Those kids, in this case, they will be able to enter our high school, our primary school tuitions, etc. Because you have tested our brand. That is the same concept that, for example, companies like breweries are doing. I remember in 2011, breweries approached the farm that I used to work by then. They wanted, in this case here, to have what we call ergonomic study over how a company's products can be tailored to fit needs of some disadvantaged groups. So for breweries, they wanted to know, for example, why women don't take their products. And we were able to do just very, very simple surveys. And women that we came across, they told us that we don't take beer simply because it's very bitter. Since 2012, now breweries started making these sweet beers. Please, I'm not advertising EABL. Don't take their products. Alcohol is bad. I'm just using this as an example to show you that once you get into business, know that business is war. And every time when you're at war, you must keep on coming up with new artilleries, new arsenals. Otherwise, you'll be killed. Business is war. So they started making these sweet drinks. Like which ones? Would you kindly tell me the sweet drinks? Oh, reactive instead of, okay, great. Winning strategy, great. Coffee, no, no, no. For example, the Snap, etc. Now, let me tell you something. When they brought these sweet drinks, later on when we were doing now the post-mortem survey, we realized that we had more men taking those ciders and the other drinks, meaning that there were men that were also suffering in silence. So basically, their bottom line grew because of water diversification. So you must come up with new products. Whenever you are giving a strategic focus, I would want to see your report. Your report saying that 2022, we had this number of products. As we move along, now we have, ladies and gentlemen, please allow me to share something here. People are serious with business. It's only in Africa here that we are not serious with business. People are serious with business. If you look at, this is the integrated report of EABL. You can see since 1922, EABL is celebrating life. Yeah, 100 years. 2022 integrated report and the financial statement. They're not supposed to use this word financial statement here. All right, it's just supposed to be integrated report because integrated report talks about FESG, financials, environment. Then we have, in this case, social and governance. 100 years old, 100 years bold. Cheers to our next 100 years. This is the future focus, the future orientation we are talking about. These guys are thinking about their next 100 years. A 100 years of creating value. So you can see from 1922, it was just a small KBL incorporated there. You can be able to see it along Thika Road, the very old buildings. They have never even been demolished. And then here, of course, there was a game changer when Diageo acquired majority control of EABL. Diageo is a British firm. All right. Now they are in Uganda. They are listed there. They are listed there. All right. So you can see this old building over there. So ladies and gentlemen, what I would want to show you here is basically the management commentary about this report. The integrated report for the fiscal year ended 30th June 2022 provides a holistic view of EABL. It comprises information about our company's strategy, activities, approach to operating responsibly, financial and financial results. The aim is to comprehensively report to our existing and prospective investors in a unified way that reflects how the company operates. Framework, of course, it's IFRS. Our integrated report is prepared in accordance with International Integrated Reporting Framework, adhering to fundamental concepts. The annual financial statements were prepared in accordance with IFRS. The report is part of our commitment to being transparent because when you talk of integrated reporting, it's all about transparency and accountable to our stakeholders. The group constantly considers whether there are additional reporting frameworks or metrics we could use to enhance our disclosures. I know in this case here that their auditors are PwC. We hope very soon they will be able to take some of us, these local auditing firms like Aura and Co, to also audit their systems, their company. So table of contents, you can see how this thing looks like. Interesting. Integrated report. You can see somewhere we spoke about organizational overview as one of the components of an IR. You can see EABL overview. You can see they have our business model. You can see they have stakeholder engagement. Stakeholder engagement. You can see they have a whole section where they're talking about their performance. All right. You can see they have a whole section where they're talking about governance, FESG. All right. So, ladies and gentlemen, if you look around, they have financial statements there. There must be a section, it may not be directly stated here, but there must be a section where they're talking about environment. There must be a section where they're talking about environment. It must be there. So please allow me to look for these capitals, the 6 capitals, and then you'll be able to see the connectivity. Yeah, like you can see their business model. We are a proud grain to glass business with consumer at the heart of our business. Our business operates with the simple purpose of supporting our consumers in celebrating life every day, everywhere. This can be a very good tagline for online classes. For online classes. Great. Financial capital. So those 6 capitals will be able to find them. Oh, I wanted you to see where they are talking about their manufactured capital. Manufactured capital. Anyway, we shall overcome. We shall overcome. We shall overcome. It must be somewhere. It must be somewhere. Great. Thanks for that answer, Victor. Great. So, but at least you are able to see, ladies and gentlemen, how this thing looks like, our business. You can see, like, now this is what I was looking for, only that I was searching using now wrong names. Like manufacturing capital, we have 7 production sites across East Africa devoted to research and development, distillation, maturation, brewing, warehousing and packaging of spirits and beer. Our investment in property, plant and machinery are a source of competitive differentiation. Kenya shillings 69 billion. In property, plant and equipment, Kenya shillings 2.5 billion productivity savings. All right. You can see social and relationship capital. They haven't organized them very well. We continue investing in communities where we live, work and sell. We are committed to do our business the right way from grain to glass. From grain to glass. Human and intellectual capital. We are proud of our people whose passion, commitment, and specialist skills make the difference. Championing inclusion and diversity is fundamental to driving engagement and achieving the best possible outcome for our business. 2,000 full-time employees and contractors is very good HR. 31% gender diversity across EABL, inclusivity for sure. 36% senior leadership roles are held by women. They should have also spoken about disability. We have to walk this journey with those of us who are disabled, people living with this, for example, albinism, etc. You can see 95% of our water waste is recycled. 362,248 meter cubed of water replenished and reused. 0 total waste to landfill from our direct operations here. Natural capital, we recognize that the threats to our environment are urgent and growing, and we are committed to taking actions to preserve the scarce resources. And you can see all these things are really interconnected. Yeah. Biomass plant to help reduce 42,000 tons of our carbon footprint, 91% of renewable electricity utilized across our direct operations. Our contribution to the United Nations Sustainable Development Goals, SDGs, sustainable sourcing, manufacturing, reducing carbon emissions, inclusivity and diversity. I would want to read what they have here. Water preservation, growing with communities, the people aspect, promoting health and safety, promoting positive drinking. You can see stakeholder engagement, why we engage our stakeholder interests. And then most importantly, I would want us to read the chairman's statement. Yeah, I told you about management discussions and analysis, the management commentaries. Ladies and gentlemen, most of you after 3 to 5 years, you'll become CFOs. You'll become CEOs. Yeah, like I've taught very, very many people like Joshua Igara, the former CEO KCB, was my student. Now he's at Stanbic. Yeah, great gentleman, great gentleman. And of course, I know what these guys did. And you guys are not far away from what they did. So I know 3, 4, 5 years, you guys will be there. Even currently, like now in this group, there must be an MCA. There must be an MCA in this group. There must be, for example, I mean, you guys, I'm so sure some of you are really holding very, very senior positions. The only thing we need to pray for is ECPA ingiane. ECPA na wafungie hapa na pale ingiane. So you will be required to write this kind of statements here. Look at how these guys are writing here. So you guys know Martin Odur. Group chairman statement. I'm very pleased to share with you our report for the fiscal year 2022. A period which saw regional economies begin to recover from the impact of COVID-19 pandemic. As you know, our 2 previous financial years were deeply impacted by the vagaries of the pandemic. And our focus then was to protect our people and the business. Fiscal year 2022 has been a much better year. Not only have we seen a full reopening of our economies in East Africa, but we have also witnessed a resumption of our on-trade business. Despite the challenges, our focus and agility, future focus, have enabled us to navigate the volatility and deliver strong performance. The managers must discuss performance. Our employee engagement remains high, and we continue to invest for long-term growth in our brands and in our portfolio. As a consumer-driven business, we take time to study the market, to understand consumer needs and wants and how best to satisfy them. That's why we continuously invest in innovation of our brands and delivery channels. As I finish this, the board and the management team are committed to delivering long-term value to all our stakeholders. Long-term value is integrated reporting. As we celebrate 100 years of EABL's operations, we continue to pursue our vision to be the best performing, most trusted and respected company in Africa. So, ladies and gentlemen, I want to believe now, should they bring a question regarding this integrated reporting, I don't want you to cram, but you shall be able to give it justice. You shall be able to give it justice. All right. So can I go on, ladies and gentlemen, to something different now? Yeah, Faith, once we get, in this case here, a good university to partner with us, we shall be able to reach there. It's about 3, 4, 5 years in incubation, and then we become a fully fledged university ourselves. So they are ready. Wow, thank you so much, Lizzie. This is very good. Very good. Very good. I'll be able to, this is very good. Yeah, please join us. Join us. Yeah, great. Victor has been able to address that. Thank you so much. Thank you so much. Yeah, that is the advantage of studying at RCM. You get more than the paperwork. You get more than the classwork. You get to learn so many things. Now, ladies and gentlemen, the last concept of today is conceptual framework. I love this conceptual framework. Now, when we talk of conceptual framework, this is that framework that has got key concepts, key principles that the IASB uses whenever they want to create new standards. So whenever they want to come up with a new standard, they must always go to the concepts document, what we call the conceptual framework. So conceptual framework is what the Bible is to a Christian. It is what the Quran is to a Muslim. Anytime, ladies and gentlemen, if you are a good Christian, when you are down, or you would want, in this case, here, some kind of great motivation, you should always be making reference to the Bible. You go back to the Bible, look at this quote from here, then you feel rejuvenated, you feel nice. The same case with this conceptual framework. The ISB will use it, will always make reference to it whenever they are coming up with a new standard. The accountants like myself outside here who have worked with these international firms, when you get yourself in an issue where you're not able to interpret an IFRS very well, we shall always make reference to the conceptual framework. Because the conceptual framework is deeper than most of these IFRSs. You'll be able to get more meanings out of this conceptual framework. For example, how they define an asset. So anytime you want to do interpretations, you want to know how a particular IFRS was created here as an accountant, you will be able to go back to the conceptual framework. So the conceptual framework is a set of principles and guidelines that support the preparation and the interpretation of financial statements under IFRS. Wow, okay. Purposes, stroke importance of the conceptual framework assists the IASB in developing and revising IFRS standards consistently. It guides preparers when no specific IFRS standard applies or when there is a choice of accounting policies. So for example, if we would want to account for Bitcoins, your company has Bitcoins, and then of course there is no IFRS on Bitcoins, then the very best is to go back to this conceptual framework. You as an accountant, try to read this conceptual framework and see, are these Bitcoins really assets? So are they able to create cash flows for you in the future? So then if there is no IFRS, you will be able to go back here. It helps us understand and interpret IFRS standards clearly and consistently, promotes consistency in accounting across different companies and industries, provides a foundation for developing accounting policies based. So this conceptual framework provides a foundation for creation of IFRS. It provides a foundation for creation of accounting policies. It helps us interpret and understand the IFRSs. I mean, there are so many points that you guys will be able to read. Otherwise, that now marks the end of my today's theory class. It will be my pleasure meeting you again tomorrow at 4 p.m. for about an hour, where in this case, the very first stuff will be about the processes that we go through whenever you want to create IFRSs. That could be there in your exam. Thank you so much. Be blessed. And of course, those students who are following me on YouTube, you should be able to subscribe, comment, and ensure that you do what here? You share this link with all your friends. Bye. Thank you.